I want to start with you, Josh, and I'm going to hear from you and Bryn first, because you're our longest owners of Nvidia. And I'm wondering what you make of today's sell-off, how you're putting it into context, the kinds of questions you want answered, and what all of this means to you.
In this video, Josh Brown explores the recent decline in Nvidia stock. He attributes the sell-off to a recalibration of expectations about the GPU market and a volatile speculative environment amplified by option tradings. Josh argues that the investment in AI could actually increase demand for Nvidia's chips rather than diminish it, and believes the panic surrounding the stock's decline is exaggerated, potentially leading to greater demand for computing power.
With options trading here, with leverage, we've got vehicles that are 2x Nvidia. We've got all kinds of zero data expiration, weekly options. It's an absolute casino that's been built on the back of a legitimately amazing growth story. And so I think if you didn't have that circus in town, you'd probably see the stock down 5 to 10%. But because you have all that leverage, you're seeing much more. I think there are two very important things that people need to know about what's happening with DeekSeek AI and the way it's being interpreted on Wall Street. The first is, it doesn't matter if it's a Chinese government psyop or not. The technological innovation of having an LLM train itself through reinforcement learning is impressive. The cost efficiency of doing inference with only 7 billion parameters rather than 700 billion parameters is impressive. The possibility of being able to do more model training and inferencing with less usage of power and less chips is impressive. It doesn't mean, though, that chip demand is at risk. What I think it means is you're more likely to see an acceleration of AI everywhere, all over the economy. And I think that that's kind of becoming the default version of what's to happen here. The idea of LLMs becoming commoditized, Scott, has always been on the table. That's why Zuckerberg released Llama 2 the way that they did. We've seen this in previous technological revolutions. In the cloud, for example, Google gave us docs, sheets, and slides, which commoditized Word, Excel, and PowerPoint. But everywhere in the world you go, you will still see people using Word, Excel, and PowerPoint. I don't think there's a line of Fortune 500 CTOs who are dying to take a fistful of Chinese AI technology and shove it right into their cloud data. It's unfathomable. So I think this is a little bit overdone. And then the second thing I would tell you here, maybe the more important thing, most of this conversation about the impact of DeekSeek is happening on Twitter. If you know anything about Twitter, X, if you know anything about X, you know it's loaded with hedge fund managers and asset managers who absolutely loathe the Mag 7. They've been waiting for this moment for 2 years. These stocks, Nvidia in particular, have been making them look bad for 24 straight months, and they're dying for this moment where small caps are up, Europe is flat, value stocks are outperforming growth, and they view this as comeuppance for the people who have been riding these giant tech stocks to huge gains. And I think because there's that desire to see these investors get beaten up a little bit, maybe that's why some of the rhetoric about this being the end of Nvidia is getting so overdone. I think there's some wish casting happening here from some of the pseudonymous hedge fund managers.